was a cliffhanger that kept people who work in this building busy on New Year's Eve and New Year's Day. They were debating and then voting on the American Taxpayer Relief Act, better known as the Fiscal Cliff Bill. The 2 a.m. Senate vote was surprisingly overwhelming. 89 in favor, only 8 opposed. When the bill got to the House, it passed by a closer margin, 257 to 167. The question now is, how does the bill affect tax professionals? Western CPE wasted no time in bringing together 2 of its tax update wizards. Vern Hoven and Ron Roberson discussed details of the bill in a special 55-minute webcast. This sequence begins with Roberson outlining the new tax rates.
This is an extension of the 2001 Bush-era tax cuts. So what that means is the 0, the 10, the 15, the 25, the 28, the 33, and the 35% rates have all been retained, and they are now permanently retained. What's new and different is there's now a new 39.6% tax rate that has been added to the tax rate schedule. That tax rate will apply to taxable income in excess of $450,000 for a married couple, in excess of $425,000 for head of household, and in excess of $400,000 for single filers.
No, $400,000 for single and $450,000 for married filing joint?
Yes.
What are you going to tell your clients who come in making this kind of bucks? You going to tell them to get married?
I'm going to stay completely out of that. I am not going there. But you hit on a very valid point, Vern, is that this bring, we have some marriage penalty relief. That was talked about. It was kind of a buzzword way back around 2000. This is absolutely the opposite of marriage penalty relief. If you had two taxpayers, single taxpayers, living together, they could make $400,000 apiece and avoid the 39.6% bracket. If they get married, then they're going to end up with income of $350,000 taxed in the 39.6, or an additional 4.6%, about $16,000 of tax. So when you buy the ring, you also have to understand you got an annual cost involved there.
That's an annual cost.
It is an annual cost.
So the marriage penalty is really roaring right now.
Yes.
Starting in 2013.
Yes.
And that's not the only thing. So they added the 39.6% bracket for the people above married filing joint $450,000. At the very same time, they did a couple of, I call them haircuts. We call them in our field haircuts. What's that?
Well, what they did is we had this prior to 2010. The rules were that high-income individuals lost part of their personal exemptions and part of their itemized deductions. They were phased out. And the higher the income went, the higher the phase-out was. Those have been gone. In 2010 and 2011 and in 2012,
right.
No matter, I don't care if you make $100 million a year, you get 100% of your personal exemption and all of your itemized deductions.
Okay.
Starting in 2013, the phase-outs are back. So the personal exemptions are going to be taken away if your income exceeds. If you're in the way it works is that now that would have been nice if we could decide who's rich. But we didn't. We set a different limit for these folks, and the limit is $300,000 for married joint, $250,000 for singles. If your income exceeds those amounts, then you're going to lose your personal or they're going to phase out your personal exemptions and your itemized deductions.
I'm sorry. When you do that, Ron, that a denial of a legitimate deduction to certain taxpayers. I don't care if it's on income or not. If you deny certain taxpayers can't take all their personal exemptions in Schedule A and others can, that denial of a legitimate deduction is the same thing as a hidden tax bracket increase.
You're exactly right.
And I could quantify, I can figure out what that is. On the Schedule A, it's about a 1% rate increase. And on personal exemptions, it's a 0.9 for each exemption. So it hits the larger families more than the smaller families. So we really don't have a 39.6. We have a potentially higher than that, even for the 35% tax bracket. Now, I'm not smart enough to figure that out. That's what the computer is going to be able to do.
Right.
But the fact is that we really don't know what the highest bracket is at this point.
Well,
it's going to be depending on how many kids you got.
You're right. How many kids and what your itemized deductions are. And, Vern, I've heard you say many times, and I am 100% in agreement with you. I don't care, as a tax preparer, I don't care what the tax bracket is. It's
I
highest
don't.
tax rate on taxpayers.
You're right.
But I think every taxpayer has a right to know what their rate is. And doing stuff like this hides the rate from them. And to me, it's deplorable. It never should be done. But they did it.
But that's what we've got, and we're going to have to be somehow explaining this to the clients.
I agree.
One item left out of the bill will hurt all taxpayers, effective immediately.
But we had one provision that didn't make it.
Yeah, I think that's the biggest news here, Vern. The one that didn't make the cut, that everybody thought would make the cut, was the 2% payroll tax holiday. 2010, 2011, the FICA percentage dropped to 4.2% for employees. Self-employment went down for 2% for self-employeds. That did not come back. So in 2013, and it's not coming. This is it. We're done. Nothing's going to change now, and that is gone. So everybody's going to see.
So what impact? Let's say somebody makes $50,000, a W-2 wage earner. So what's the impact to them on going from 4.2 to 6.2?
$1,000.
For the year.
$1,000 for the year. 2% of the 2% of the $50,000. So it's $1,000.
2% of 50,000.
Yes.
And so, wow, that's a tremendous. What is it? $117 billion.
The estimated cost of that provision alone for 1 year is $117 billion. So that's $117 billion more tax that folks are going to pay this year, and $117 billion that probably got spent in the economy last year that's not going to.
So just for the 2%.
Yes. There's much, much more in this webcast. It's available free to this season's attendees of all Western CPE Federal Tax Update or Federal and California Live seminars. It's free also to anyone who has purchased a Federal Tax Update or Federal and California webcast during this season. For others, the Fiscal Cliff webcast is available for just $49. For more information, go to westerncpe.com or call the number on your screen.